I'm Mike Bjork. Today is Friday, January 9th. Hope you guys have great upcoming plans here. And again, getting back into the things after the holiday break. We got a couple economic news releases. Of course, the big ones we were talking about all week. And that's the non-farm payrolls for the month of December. So last month, back in November rather, we had 353,000 new jobs. The forecast is supposed to come back down to 230,000, but a little bit better than we expected at 252,000. The unemployment rate for the month of December we had in November back at 5.8, and we were figuring the forecast at 5.7, but came in much better at 5.6. So good numbers overall. I mean, at least it's better than what we expected. Wholesale inventories for the month of November, we had a 0.4% back in October. In November, it jumped up to 0.8%. So the wholesalers were feeling a little bit better, so they were stocking up for the consumers and businesses to start purchasing, which is why you're seeing an increase in the wholesale levels here. Stock market down. Why is that? A lot of it has to do with comments made by, well, not comments, but rather the wage factors. So yes, we're getting more jobs, but problem is people aren't making more money, and obviously we need to see a little bit people, if they're making more money, they're going to be spending more money. So that's the kind of dilemma, and that's why they're saying it's kind of a mixed bag of news today in these regards. Also, some of the comments by Evans, kind of making, he doesn't think the Fed will be raising rates probably not until 2016. Now, there's a lot of analysts who think it will happen this year because the economy is going pretty well, but there's other people are kind of think that probably won't see a rate hike this year. So, it's kind of hard to say, but it's possible we could see some improvement, continued improvement in the interest rates this year. A lot of it has to do with the oil prices. It has to do with other countries struggling with their, and then if you look at the price of our bonds compared to like the Bundesbund or the Bund in Germany and some of these other countries, they're less than 1%. There's some of them are like less than 0.5%, where we're at 2%. So where are the investors going to put their dollars to get more for the money? And a very safe flight to safety, in a very conservative amount, would be the U.S., which will help our interest rates even further. So this could help us out this year. We could see rates remain very low. Some think it could even go lower. We'll have to kind of wait and see, especially with the government not making those purchases. So we'll have to kind of wait and see what transpires here. But let's go ahead and speaking of rates, let's go ahead and take a look at the current interest rates for home loans today. And we're seeing, as you can see, a spike in there. So with that going upwards, the bond market going up, that means interest rates are coming down a little bit. So we're getting a nice little improvement in our interest rates after a couple of days of purchasing equities markets were buying. So which was taking money out of the bond market, going back into equities. Now we're seeing some of that coming back a little bit today. All right, folks. Hey, good news today. We are getting a little bit better interest rates. Hope you guys have a wonderful weekend, and we'll look forward to see you guys on Monday. Take care.